Welcome back. Now, despite a sluggish economy, Capital Appreciation nearly doubled its annual profit, reporting a surge to 170 million rand. This growth led to an 83% increase in headline earnings per share and a 21% dividend increase. And joining me now to unpack the company's performance in greater detail is the CEO, Brad Sachs. Thank you so much for your time, Brad. Let's actually start off with that top line because your revenue did exceed the 1 billion rand mark. Talk to us about the drivers of that performance. Particularly making mention of the stronger momentum that you saw in the second half of the year.
Yeah, so we had a really great second half of the year, and we are fantastically proud that over a short period of time of 7 years, we went from zero revenue to over 1.1 billion rand. The reasons for that are that the sectors in which we participate have an organic growth and a secular trend which is driving demand for digital payments and driving the demand for technology solutions to everyday business problems, whether it's cloud computing or security or digital channels, the deployment of artificial intelligence solutions. And those are areas where we are particularly strong and have some really great competence.
It's quite interesting, Brad, that you say that, the sectors that you operate in have, organic growth and good potential over there. But, you are still operating in a weak economic environment. Did this not trickle down to your business, or are there certain pockets in which it trickled down?
Yes, it absolutely affects us. The macroeconomic and political overhangs that are affecting South Africa have definitely affected us. And that is evident in the performance of our software sector. Our software business has seen a delay in a number of projects that were meant to commence that didn't commence on the timetable anticipated. And we had already planned and incurred the costs necessary to be able to fulfill those contract commitments. And we saw a decline in the profitability of our software business, notwithstanding the demand for software solutions and services. We weren't able to pivot those resources fast enough into revenue generating initiatives. So we are definitely affected by the overall economy. And had the economy been performing better, I think our results would have been materially better beyond the performance that we've already posted.
Well, talking about this trickling down of the macroeconomic headwinds to that software business, is there any muscle to be built to protect the business?
The nature of the software services business is a very people-intensive business. So you need to staff up to be able to fulfill the demands that are placed on us by our clients. And so you can't manage that. It's not a matter of holding inventory.
Yeah.
Or what we did do, and we hadn't anticipated, is we had previously hired resources in advance of project commencement dates. And we have slowed down our hiring dramatically to be able to absorb the capacity that we have. And so the growth in people over the course of this financial year was on a apples to apples basis only 5 people, where in previous years we've grown by 60 to 70 people year on year. So we are being a little bit more moderated in our growth activities.
All right. Well, just talking about growth, what will characterize the momentum of this performance, at least in the short to medium term? What will that hinge on?
It will hinge on the rate at which the economy stabilizes and the political undertones in the economy stabilize, because that will give businesses the confidence to decide how and how much money to spend on these digitalization projects, which are necessary. The ability to deploy artificial intelligence solutions to optimize operations and reduce costs and reduce inefficiency and waste is an absolute necessary expense to incur. But if you are very uncertain about the overall undertones, you are more reluctant to spend that today when you can decide to maybe spend it in a month or 2 months as the case may be.
Well, Brad, I mean, we've been talking about, the shaky economic environment in South Africa, but you do have an international business. And I noticed there that revenues did decrease. How are you looking at that division of the business because it's usually seen as a hedge against risk for the South African economy?
So that has been the case with us historically,
Yeah.
and we have grown internationally at a very rapid rate. This year, some of the issues that we confronted domestically in South Africa also affected our European clients, and we did see a slowdown in some of the international activity. We are starting to see some green shoots with respect to that coming back sooner, but we have a very focused effort on international activities. We were able to renew one of the big contracts that we had in the Southeast Asia market, and so that was a very pleasing result. And hopefully we'll return to growth internationally.
All right. Well, just to wrap up the conversation, Brad, I know that you've been spending money on future growth, including on acquisitions. You've also implemented share buybacks. And I'm wondering, in terms of your capital spend priorities, are you going to be continuing on that train?
We are. We're going to continue to invest in organic growth. We're going to continue to pursue acquisitions. And we have repurchased approximately 55 million shares over the course of the financial year. We think our share price is very undervalued, and we are going to continue to deploy capital to return value to shareholders, not only by way of dividends, which we did this year with a 10-cent dividend on an annual basis, but we are going to repurchase shares in the open market.
All right. Well, thank you so much for your time and giving us insights on those numbers that came out from Capital Appreciation this morning. That was Capital Appreciation CEO Brad Sachs.